Stop what you're doing. Seriously, if you are out there hunting for the ultimate AI stock, you might be looking in the exact wrong place. Everyone is obsessed with the mainstream chip makers, right? But the real winner is the company acting as the undisputed gatekeeper to the entire semiconductor industry. Welcome to The Explainer. Today, we're tearing down KLA Corporation. We're going to cover everything from their flashy new 10-for-1 stock split to a hidden AI moat that has quietly captured a shocking 58% market share. It's like they own the toll booth to the AI revolution. By the end of this analysis, you're going to know exactly if this stock is a brilliant buy or just a dangerously overpriced trap.
Okay, so let's start with the massive headline that's triggering some serious FOMO right now, a 10-for-1 forward stock split. Look, we all know the pain of retail investing. KLA shares have been trading at a steep premium, which honestly locks out a lot of everyday investors. It's frustrating. But by slashing that nominal price down to the $180 to $190 range, KLA's board is instantly making the stock accessible to a massive new wave of retail money and their own employees. And the best part? It doesn't alter a single fundamental of the underlying business. The pie is just cut into more slices.
And listen, they are moving incredibly fast on this. If you are a retail investor, you'll want to mark your calendar right now. The mechanics are super aggressive. Stockholders of record by market close on June 4, 2026 get 9 additional shares for every one they hold. Boom, just like that. Then, by June 12th, split-adjusted trading actually goes live. It is a hyper-compressed window, and it's got all of Wall Street buzzing and reshuffling their portfolios to try and catch the momentum.
But here's the thing. The split is honestly just the bait. The real hook, the thing you actually need to pay attention to, is their capital return strategy. They just authorized a monstrous $7 billion share buyback and paired it with a 21% hike to their quarterly dividend. To put that in perspective, this is their 17th consecutive annual dividend increase. 17 years. When a management team drops $7 billion to buy their own stock, they are lighting up a neon billboard to the entire market. They're basically saying, we are generating immense cash and we are incredibly confident in our future.
So where on earth is all this cash actually coming from? Well, let's look below the surface. KLA doesn't actually make the chips. Nope. Instead, they are the ultimate quality control gatekeepers. Think of them as the atomic-level spell checkers for the entire semiconductor world. Their process control systems basically scan silicon wafers to catch microscopic defects. They ensure that the insanely complex chips that power our AI data centers aren't just, really expensive pieces of trash.
And in an industry where a single microscopic flaw can literally ruin millions of dollars of product, precision is everything. This brings us to a mind-blowing number. KLA commands a staggering 58% of the global process control market. 58%! That makes them roughly 7 times larger than their closest competitor. And get this, since 2021, they've actually expanded that lead by 360 basis points. That's not just having a good market share. That is an impenetrable, algorithm-backed monopoly on quality.
Now, why does this matter so much right now? As chips shrink down to 2 nanometers and we enter what they call the angstrom generation of multi-layered chip architecture, the manufacturing difficulty goes absolutely off the charts. It's literally like trying to build a skyscraper on the head of a pin. Because these advanced packaging methods dictate whether a chip actually works or not, fabs have zero margin for error. None. KLA's tools are pretty much the fastest way for manufacturers to save their yields and stop burning through cash.
And this, right here, is exactly where the AI hype turns into hard, cold cash. KLA just completely shattered their own forecasts. They revised their 2026 advanced packaging revenue target up to a massive $1 billion. That is a nearly 60% year-over-year explosion from their earlier estimates. Let that sink in. This proves that KLA isn't just some legacy tech player. They are aggressively, and I mean aggressively, monetizing the global scramble for AI infrastructure.
CEO Rick Wallace really hit the nail on the head here. KLA isn't just riding the coattails of the AI wave, they are literally building the surfboard. Those massive data centers that are training tomorrow's generative AI, they simply cannot exist without flawless advanced semiconductor packaging. KLA is the ultimate pick and shovel play in this whole AI gold rush. They sell the absolute most critical tools to the builders who are constructing the entire ecosystem.
And you know what? The numbers back this up with ruthless consistency. They just crushed Q3 expectations with $3.42 billion in revenue. That's an 11% year-over-year leap. And they're guiding even higher for Q4, looking at $3.57 billion. This accelerating sequential growth proves that what they call process control intensity is rising.
In simple, everyday terms, chip makers are basically being forced to spend a larger and larger percentage of their capital expenditure strictly on KLA's tools. They don't have a choice.
So if we break down that upcoming revenue, it reveals exactly where all these heavy investments are flowing. It's going straight into foundry and logic. Roughly 82% of their projected semiconductor systems revenue is targeted exactly there, with the remaining 18% in memory. But crucially, the vast majority of that memory slice is DRAM. And why is that important? Because DRAM is the exact type of memory required for high-bandwidth memory in modern AI GPUs. They are perfectly positioned at the dead center of global tech spending. It's brilliant.
And the crazy part is, they aren't just looking at the next quarter. They are building a massive blueprint for the end of the decade. Their newly unveiled 2030 target model projects a staggering $26 billion in annual revenue alongside $84 in non-GAAP earnings per share. If you're an investor trying to map out a long-term valuation, this trajectory is management's ultimate flex. It proves they anticipate absolutely no slowdown in the structural demand for their tech.
But wait, let's take a breath, because here is the reality check. An impenetrable moat comes with a staggering price tag. KLA is trading at a massive premium compared to traditional wafer fabrication peers like Applied Materials and ASML. With the forward PE sitting between 42 and 50, yeah, you heard that right, 42 to 50, the market has already heavily priced in this AI advantage. That elevated valuation means future stock appreciation really can't rely on multiple expansion. It has to be driven purely by aggressive, flawless earnings execution.
You also absolutely have to factor in the geopolitical map. A massive 70% of KLA's total revenue is heavily concentrated in Asia, specifically Taiwan, China, and Korea. Now, while this is simply where the world's most advanced fabs happen to be located today, it undeniably introduces severe geopolitical vulnerability. Shifting export controls, trade tensions, or domestic procurement pushes, these are serious, real-world risks that you have to weigh against that otherwise pristine balance sheet. Finally, there's a bit of an ironic twist squeezing their near-term margins. That very cyclical recovery in the memory market that is fantastic for KLA's customers, well, it's actually making KLA's own equipment more expensive to build. Spiking DRAM prices elevate the component costs for the massive image processing computers integrated inside KLA's inspection systems. Management even admits this is going to compress their full-year 2026 gross margins by up to 100 basis points.
Which brings us to the ultimate question. Think about everything we just discussed. Does a flashy stock split and a truly dominant AI moat actually justify a 42x premium? You are undeniably paying top dollar, but you're buying the undisputed gatekeeper to the next generation of global technology. So, is a 58% market share worth the steep price of admission today, or is this just a valuation trap waiting to spring? Let us know what you think. Thanks for joining this explainer, and we'll catch you on the next one.